Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem that the Australian dollar overnight is weakening, and from a technical perspective, further clues are emerging. Purely for the fact is that we got some divergence from the RSI. We've got a MACD that's slowly declining, and also we are seeing weakness emerging as the US dollar slightly recovers in the last 12 to 24 hours. The immediate target holds at 45, and with the objective for this week still remaining at 79.90. It is viewed that the risk events into this week could easily see the market tumble. Firstly, we've got Donald Trump speaking. Along with that, we do have the Fed rate decision and also the statement to be released. It is viewed that the market will hold on rates, and my view is the fact that the next hike won't be until March. And then later we do have the Australian CPI, which may show inflationary pressures in the Australian economy slowly reducing. What is also maybe another factor that's putting pressure on the Australian dollar is the fact that it is a commodity-based currency. Therefore, with the iron ore weakening in the last few days, could put a bit of a dampener to any bullish outcome. Well, as I mentioned, the US dollar did strengthen slightly overnight and now puts pressure on the support at 123.20 for the euro. It is viewed that a break beneath there would give further scope to the downside and bring in a target eventually of 122.65.75. Any advances should find resistance at 124.30 and firm above at 124.70. With the divergence clearly bearish and with no trend from the ADX and also a stochastic, as well as a MACD breaking down, is supportive for a correction coming for the euro. Well, it would seem that since the rebound from 108.25 on Friday, that dollar yen case has actually strengthened, and it nearly took out the resistance at 109.20 overnight. With further scope to the upside, I do expect to see from the divergence a break of 109.20 and see a move through towards 109.80.85. Any dips should be a buy towards 108.25 to 50. The pound is slightly underperforming, and as you can see over the last 24 hours, it is a little bit concerning that the fact we could be getting a slight breakdown. The market is now waiting for the Bank of England Governor Mark Carney to testify before the House of Lords Economic Affairs Committee in London later today. The market will be keen to hear how hawkish or dovish the Bank of England Governor is. If Mark Carney is to give slightly a hawkish statement, then we could see a slight encouragement to the upside. But do remember, we are fully priced in since the last few week or so rally in the pound from the lows of 134. The gold outlook did break down overnight and has taken out the support of 41. Now from that does expose further risk to the downside and looks towards 36 to 30 or maybe down to 1,325. But the region I find the base is around 2024. Any resistance challenge to the upside now should find 46 as an intraday cap. And the view on oil is coming through as the market slips away from the 66 handle and now looks further towards 64, 60, 70. In light of the technical implications, I do support a further breakdown in oil. So any advances should now struggle towards a region of 66. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the day that's ahead.